You don't see that for 80, 100, 120 years is the frequency on which we see the whole financial system shift from one reserve currency to another. So for that to happen in our lifetimes, like, again, not just a once-in-a-lifetime opportunity, but probably multiple lifetimes. I think it'll be a little more aggressive than Erin. She says, over the next 10 years. I'm going to say in the next 5 years, 2030-ish, maybe a little bit after that we see global markets, FX, commodities, the back end of the stock market, all priced in drops. We had 13% down in the S&P in one day. Like, that is wild. That is a big drop in financial markets. They're going to tokenize the stock market in the second half of this year, but that's the first move. And so when that happens, they're going to have to drive XRP's price to significantly higher price in order to be able to have enough liquidity.
All right, we're going to close this event out with one more speaking panel. This is going to be the keynote. Let's bring Jake Claver up onto the stage, the CEO and principal of Digital Ascension Group. Jake Claver is the man in the room, a multifamily office serving high net worth investors and ultra high net worth clients seeking structured exposure to digital assets and fintech innovation. We heard, from Aaron Freeze directly, what the regulatory regimen and focus that they're instilling into their structure. So through affiliated platforms, including Digital Wealth Partners, Syndicately, Beyond Broke, so much more, a specialized SPV, well, let's talk about Syndicately real quick, a specialized SPV investment platform which enables and allows Jake to support private market access and scalable deal flow for sophisticated investors. His work integrates traditional wealth management principles with emerging Web3 structures. Jake develops educational programs for family offices and financial professionals to navigate digital asset markets with regulatory awareness and operational discipline. He's also the largest man in the room, too, next to Will. As a keynote speaker and advisor, he focuses on long-term portfolio durability, multi-generational wealth strategy, and the convergence of blockchain technology and global finance. Jake, pick your seat anywhere you like, sir. Oh, I can't wait. The reason why I felt like everyone deserves a long-winded introduction is because I came off the heels of visiting Washington, D.C. at the Wharton-hosted 2026 Future of Finance Forum, and everybody that spoke in that room was super decorated and deserved a long-winded introduction, and so does everybody who's been on stage, from David Goodman, John Wingett, Nathan Mahoney, Will Carr, Nolan over here, and just so many. So let's start things off, Jake. I watched your show last night, sir. I watch it very often because you're a wealth of knowledge. Let's talk about what the future of finance looks like as we move into this market underpinned by the XRP ledger and some of these cutting-edge blockchains. But let's focus on the XRPL. We're familiar of some of these. The one XRP actually represents 1 million drops. What does the financial markets look like when things are priced in drops?
That's a fantastic question. And so, my answer is probably going to be a little more aggressive than Aaron Freeze, which we would want it to be, right?
It better be.
So my whole lifetime, and likely everybody else in here, everything's moved in dollars, right? Like, it's been the global reserve currency the whole time. And so for that to shift to something else is profound. You don't see that for 80, 100, 120 years is the frequency on which we see the whole financial system shift from one reserve currency to another. So for that to happen in our lifetimes, like, again, not just a once-in-a-lifetime opportunity, but probably multiple lifetimes. If you're sitting in this room and you have an allocation or you understand what this is, kudos to you. There are very few and far between. There's only 7.5 million wallets total on the XRPL. So when it comes down to markets being priced in drops, it really kind of goes back to a lot of the conversations that have been had earlier. John and many of the other panelists talked about the ability to swap between anything for anything else. And a decentralized DEX or decentralized exchange that allows all those things to happen and transact and be instantly settled within 3 seconds. That's never been done before. But that's why this will be the base layer, in my mind, for the back-end settlement for the DTCC, SWIFT, commodities. I mean, we've got the CFTC chair, this has moved on to MoonPay now, but she was with Brad Garlinghouse on many different occasions and took lots of photos to share that.
I might have got a photo with Carolyn 2 days ago, which was great. Yeah.
So to see that happen, there's going to be a new underpinning, and it's not going to be dollar denominated. Obviously, the dollar is going to maintain, a large portion of its supremacy. They've got stable coins at this point. You've got the treasuries that back those, and the U.S. is poised to take large market share in this new paradigm that we're entering. But over the duration, I think that it makes the most sense that you would have markets priced in the asset that they're moving through, right? And so that's the premise that I base that prediction on, which is, I think it'll be a little more aggressive than Erin. She says, over the next 10 years. I'm going to say in the next 5 years, 2030-ish, maybe a little bit after that we see global markets, FX, commodities, the back end of the stock market, all priced in drops.
We heard the CEO of NASDAQ already hint to that with the whole. I mean, they're not just an exchange; they're now a technology provider for the larger market. Interesting. Let's talk about some other things that are going to drive global adoption with the intersection of blockchain and everything alike. You talk about the yen carry trade unwind. We've heard some developments across the pond with the Iran dropping some missiles. Can you talk about what do you think are going to be some trickle-down effects or stepping stones that lead to a potential global mass adoption of these new payment rails?
Well, I'll take a poll. Who in the room has listened to my domino theory? Okay.
Wait, can we do that again? That's like, all right, I'm sorry. I got to do it.
Don't everybody raise their hand this time.
Ask that question again, Jake.
Just by a show of hands, who's actually listened to my domino theory?
Oh, wow.
That's awesome. Okay. So a lot of you probably already understand what I'm going to talk about, but there were a few hands that didn't go up. So I'll kind of give you the high level. You might think, okay, well, why would that have anything to do with the price appreciation of XRP? Well, for the last 20, 30 years, Japan has had almost zero interest rates. At some points, negative interest rates. So anybody and everybody that could borrow money from the Bank of Japan, they've done it. Why wouldn't you? It's free money, right? But that's caused a problem now because China has been very good about this. They've said, the money can't leave our economy. Only 10% of the money can leave our economy, but that's caused problems too. They've built ghost cities because people were like, well, I got to put it in something. I'm going to build real estate, and then they build cities that nobody lives in, right? So that's a problem. But Japan did not do that. So you could go borrow the yen, you could swap it for another currency through FX, and then go deploy that in other markets and earn money on your free money. And a lot of people park that in treasuries. Japan is the second largest holder of U.S. treasuries, $1.6 trillion in U.S. treasuries. And that's what a lot of people have done. They've just borrowed money there and then parked it in treasuries and earned a yield. The problem we have now is because of the inflation from COVID and everything else, they've had to raise interest rates there. And that's really their only lever to be able to offset the inflation in their economy. If they print more money, inflation gets worse. They have to raise interest rates. We've seen that here in the U.S. as well, right? Almost all the economies across the world have raised interest rates pretty aggressively after COVID. And now, a lot of those loans or that money that's been borrowed is coming due, or they've got to, refinance those loans. And they've got to do it at a higher interest rate. And many of the investments that they made that were pretty low risk, don't make sense anymore. And now that we have our interest rates coming down and their bond yield continues to rise because they have more inflation in their economy, they're going to have to eventually raise interest rates. You saw this start to unfold in August of 2024. We had 13% down in the S&P in one day. That is wild. That is a big drop in financial markets. And the Bank of Japan came out and they said, all right, we're going to hold interest rates while there's market volatility. We're not going to raise anymore. And they have. They've held since then. But now you have conflict in the Middle East. And you might think, okay, well, why is that correlated? How does that affect Japan? That is where they source most of their oil. And the Strait of Hormuz is a central choke point that all of their oil moves through. And if they can't get oil, energy costs go up significantly for them, which causes, guess what? More inflation. And they're going to have to raise interest rates. And so the pause that we've had is going to be, they're not going to be able to do it anymore. It's going to be the straw that breaks the camel's back, in my opinion. So when you see that happen, you're going to see a huge amount of treasuries flow onto the market. all the people there are going to divest. They're going to rotate into their own bonds because why wouldn't you? You're going to make more money in your own bonds than you would in foreign bonds. And luckily, in the last 2 years, we've passed the Genius Act. How funny that that would happen in that time. And the U.S. is now positioned to be able to soak up all of those foreign Treasury bills that are going to flow back to the U.S. because the banks need them to be able to issue their stable coins that they're going to be using. And it's about the same amount. The estimated amount of stable coin adoption here in the U.S. is about $2.3 trillion. Guess much outstanding debt we have globally?
Too much.
$2.3 trillion. It's almost the exact.
I brushed elbows with one of the business developers at Circle at one of the multi-chain events, and I asked them because I was at Circle's the Circle Forum in 2024 when they had their institutional event. It was right around Ripple's proper party as well. Elizabeth Hansen had mentioned on stage that they had launched USDC only 4 to 5 years ago, so by 2024 they had processed more than $12 trillion in transactions through the USDC network. So I asked them, "Where are you at today?" And I even asked him on camera, but he was a Wharton grad. He was good, man. And so, but he mentioned off camera, which that's fair game. There's no ideas. He said that they've processed now about $31 trillion, and that's within 24 months. And so, it's insane to see the scale and growth of these new stablecoins. And now you have the proliferation of deposit tokens and so much more. What if you can also create a stablecoin or a stablecoin that it matches or pairs to, what would it be? If it was matched to inflation? I mean, who I spoke with earlier at the Ripple at the XRP Community Day just yesterday. Man, there was a lot of interesting people in that room. I met somebody who said that they worked early on at Ripple, early employee that helped bring the XRPL labs into the community, or other integral partners. And just to see that those OGs were in the room, brushing elbows, being silent was pretty cool. So just showing up and being in these environments just are incredible. You get to meet people like Nathan, or find yourself up on stage interviewing Jake Claver. Oh my gosh! So let's talk about it. Let's switch gears and talk about some of the developments at Digital Ascension Group. As the market becomes more mature, what's next? What's new for you guys? Do you have any other updates that you haven't talked about to the market?
We definitely do. Are we on a timer?
Oh, we got all night, Jake.
Okay. Well, let me circle back and tell you how you're going to make a bunch of money on XRP real quick. So, all those flow back to the U.S. There's going to be huge downward pressure on markets from other people unwinding those positions to repay those loans. You've already seen the Fed and Warren Buffett buy a bunch of yen. Now, why would they be doing that? So that they can be a liquidity provider when that unwind happens. And so you're going to have all this downward pressure. You're going to have huge unrealized losses for the investment banks. They're already underwater. Like, we know that they have a ton of losses on their balance sheet. The only way they're going to be able to offset that is if they have an asset that, you have assets and liabilities on your balance sheet. If an asset were to appreciate substantially, they'd be able to offset those losses. And in order to be able to de-risk on the back end, I think the Bitcoin ETFs are going to play a big role in this. They absolutely have systemic risk at this point. You've got pension funds that have allocated. You've got many other financial products, sovereign wealth funds. I mean, anybody and everybody has made an allocation to the Bitcoin ETF at this point. And if you saw 50% down in a very short period of time, those people aren't hodlers. Okay, people are here to make money in markets. They're going to de-risk. They're going to sell those positions. Right now, the back end of the stock market settles T+1. Bitcoin doesn't settle quite real time, like 45 minutes to get 3 verifications on chain. So that's a lot faster than T+1. They're going to have to move to real time settlement. And to your point, we had the president of NASDAQ who was interviewed by Monica Long at Swell, talking about the first place that they're going to implement this technology, distributed ledger technology, is on the back end of the stock market for settlement and reconciliation for the DTCC between the clearinghouses and brokers. They already have it ready. And now the SEC's on board. We've got the Clarity Act right here in the near future. They're going to tokenize the stock market in the second half of this year, but that's the first move. And so when that happens, they're going to have to drive XRP's price to significantly higher price in order to be able to have enough liquidity to settle all of that on the back end. Also for a liquidity buffer for Japan, because all of that money rushing back through the FX market there they can't handle it today. They need some decentralized exchange to be able to swap between those two currencies and mitigate that collapse that's going to happen for them if they don't have that solution. So, we've got the ETFs. I think there's going to be a supply shock, and when that happens, you're going to see a much higher price XRP in order to be able to facilitate those payment flows.
You brought up Warren Buffett a couple times. I think who's recently retired, you might be his new protege in some capacity. But to that point is, thinking about this strategically, if Warren Buffett is investing into the Japanese, into the yen, and also gaining interest on certain deal flows, but if this is a catalyst, how is there more? Do you think there's substance beneath this? Is like, how strategic was it for Warren Buffett or U.S. enterprises to invest overseas and start the beginning of this unwind in some capacity?
Well, they're just making sure that they're going to be prepared for it. So Buffett's always been a liquidity provider. He's a lender of last resort, just like the Federal Reserve is. We
hear Ripple say that they aspire to be that?
Yes.
Interesting.
Yeah, it's interesting. I would agree. So for him to take that position, you guys remember SVB and when all the regional banks went down and had some issues? That weekend, a whole bunch of other regional banks flew into Omaha, Nebraska and talked to old Uncle Warren. And it just so happened the next quarter when he showed his balance sheet and what he had invested in, there happened to be a few regional banks on there. Anytime there is stress in the market, he's become a lender of last resort. And so for them to reposition to the yen like they have is a tell for me that we're probably not very far off from this actually occurring. And he'll basically refinance the debt. They have this debt with the Bank of Japan. They'll be able to access yen through him at whatever interest rate he's willing to charge. They'll be able to repay those loans, and they don't have to go through the FX market and get caught up with everybody else, right? The Fed's done the same thing. And you're like, well, why would they buy that currency versus the dollar? It's to position to make sure that they have the liquidity in that situation. So with everything going on in the Middle East right now, all it takes is them to shut down the Strait of Hormuz it doesn't even have to be that long. And you'll see the Bank of Japan have to raise interest rates aggressively in a short period, and off we go.
Yeah. Let's talk about SPVs for a hot second before we actually make any. We talk about the developments. Yes, the special announcements. Really, seriously. And so, with you being at the helm of Syndicately, SPV platform. Can we talk about what the future trajectory or the fundamentals of SPVs and how integral they are to the tokenization of real-world assets?
So, eventually we will get to where you can tokenize the asset itself on the blockchain. You'll have a digital title that's representative of that. You'll have an NFT, right, that's your digital title, and you can fractionalize ownership. We've had a few people talk about that tonight. We got Liquidity also looking to do that, with the NFTs that they have. They actually may be using SPVs. You guys using SPV? Or? REITs, okay. REITs is another great option, right? So it's a financial product. You own the underlying asset in the side of this corporation or this structured product, and then it's a securities offering. And we know that we're going to have tokenized securities, right? So SPVs are going to play an integral role. You don't want to necessarily have to deal with the asset. Like, if you bought a piece of property, do you want to be the one managing it? Maybe you do, but most likely you're looking for passive income, right? So there's some other intermediary, a third-party custodian, somebody that holds that asset, but you might not have $1 million, $5 million, $10 million to buy or pay and participate in a large REIT or Grant Cardone's fund or a lot of these other opportunities that are out there. He moved to a Reg A so that more people could participate, right? SPVs democratize access to stuff, and if you were to, create a corporation that owns the underlying asset, it's a special purpose vehicle, by the way. I probably should have said that earlier on.
Excuse me.
But it's the reason it's a special purpose vehicle is it's for the ownership of one investment. Like, you're making a specific investment in a certain thing, and then people can own shares of the company that owns that underlying asset. I think that we're going to see derivatives of the underlying asset before we see the tokenization of the underlying asset. Until we get full clarity from Congress where, like, these NFTs and digital titles are representative of ownership. I tried to do a car app, didn't work out because there's no regulation around that. So what we do at Syndicately is we do end-to-end fund administration for these SPVs. We have a amendment in the PPM and the operating agreement that allows us to tokenize these SPVs. And over the duration, I think that people will first start lending against private equity or the shares in these companies that own the underlying asset, and they'll be able to underwrite the risk that way. And then over the long term, I think you'll have private markets that operate very similar to public markets today. There'll be deep liquidity. You'll have a privatized DTCC that allows settlement between all of these things, fractional ownership where you can invest $1,000 or $5,000 and start getting revenue off of whatever's produced by the underlying asset. And that's the cool part, right? Like, they're starting tokenization with all of these things that are already extremely liquid. We went to the Ondo Summit and they talked about, they're not looking at creating more liquidity for these assets, but democratizing access to them, which makes a lot of sense because that's another benefit of this technology. But over the next 3 to 5 years, I think we could see up to 80% of the economy tokenized and brought on chain, and that's going to provide a lot of liquidity for real estate or private equity or many of the things that you invest in today that are illiquid for an extended period of time. And I think the main vehicle for that are going to be SPVs.
Yeah. Where would that position the XRPL in your mind?
So, you guys know who Propto is? Raise your hands. Anybody? Okay, we got like 3 people. So,
if you go watch the recording of our last XRP meetup, we had the CEO, Stephen LeBlanc, on stage at the Royalton, which was our XRP meetup. It was the only, I believe, official side event for Ripple Swell. So having him speak on stage was absolutely, he flew from across the pond to present. So again, it's Propto or Reclosure Net. So please look into this.
Yeah, they're tokenizing real estate over there in Ireland, primarily, is where they have their licenses. And they're able to operate, but they have a full marketplace. And what I love about their product, and like the people talked about on stage earlier, is you don't even know that you're using blockchain, using their product. It creates an interface for users where they have a zero friction experience and they get all the benefits of blockchain without having to understand any of the back-end systems that it uses to democratize access. So if you want to go look at somebody that's doing it real time, on the XRPL, using the technology in that way, they're a great example.
Yeah. Now, let's focus. Let's talk about Digital Ascension Group, if you don't mind. You're going to be speaking on stage tomorrow. What are you guys going to be talking about? Any other news that you think is worth sharing to this audience here?
Yeah, so we've grown so fast over the past 3 years, and that's really attributed to you guys. Like, if we didn't have people that wanted our products and services, there's no way that we would have been able to scale at the speed that we have. We've gone from 0 AUM to over $1 billion at one point last year in less than a year's time. We're the largest wealth manager, RIA, for digital assets in the world. And because of that, we've had to implement a lot of systems and processes and hire people.
And great people, yes.
Yeah, well, and that's attributed to Aaron Freeze. And many of the other people at our corporation that have done the time. We've had, I don't know, 300, 400 people apply. Thousands. Okay. Wow. Yeah. So they vet all these resumes. They pick the best of the best people.
Is that why my application is still pending?
Well, you've got Aaron here if you want to talk to her. So, we've gone from just a little over a year ago, probably 10 employees to almost 100 employees today. And so with that, there's been a lot of change. We've had to build in hierarchy. Before I started doing this, I was helping people grow and exit their business in M&A. And there's always a point where you get somewhere between 10 and 30 million in revenue where you have to start changing the infrastructure for your business if you want to continue to scale and meet demand and grow. And so with that, we've made a lot of new hires. We've put a lot of systems in place.
Are you using AI?
Oh, all the time. Yeah. If you're not using AI, you're falling behind. And even if it seems scary, like, just play with it. It's not difficult. You can talk to it. You'll get better at it.
Can you share maybe a use case of how you guys have implemented it in your business model?
So some of the things we were working on, like document ingestion, right? And being able to read those documents and take the specific data out of that and then plug it into the stuff that we need. Like, normally that'd be a very manual process. You'd need to hire a bunch of people. There would be an ingestion pipeline, and then they would read through the document and transfer the data. With an AI, it can do that seamlessly. It's much, much faster. And then, on a daily basis, I talk to it and figure out what's the best opportunity here, or how should I write this email, or all the different ways that people do it. I use it the same way. I just invested in a company called Weave AI, and what they do is they connect all the apps on your phone, and they use deterministic AI to be able to build a consensus on how you make decisions based on previous decisions that you've made. A lot of the LLMs and things that you use today are probabilistic. And so when you ask it something and you kind of lean a direction when you ask it, it will verify that. And it will hallucinate sometimes and give you what you want to hear versus what actually is the answer, right? So I think deterministic AI is going to be the future, but they connect all of the different apps on your phone. So let's say you want to build a business flow. I want to launch a new product. I know that I'm going to have to connect these 5 apps. This is what I want it to do. You can tell it, and it'll build the API calls between those to be able to create that for you. So anyway, lots of cool new technologies. But with all the changes that we've had, there's been a lot of things that we've implemented, and we do have an announcement for you guys. So officially, publicly right now, I want to bring up Erin Freeze.
Let's give her a hot mic.
Hot mic.
Green.
With the progression of the company, I have stepped back to chairman, and we have promoted Erin Freeze to CEO of Digital Ascension Group.
Wow. What do you have to say, Erin?
First, I want to say a big thank you to Jake. Jake and I met each other back in around July of 2024 when it was Jake and about 4 or 5 other people in an incredible, incredible vision. And he's trusted me enough to come in and to help lead this organization and to bring it to where it is. I've brought in an incredible team, some of which are back there, and we really couldn't do this without all of them as well. But the last 18 months have really been some of the best of my entire life because of what we've built together, and I am honored and humbled and very excited for what's to come. We've got really, really big plans for the next year and the next 5 years. We truly intend to become, we are already the largest asset, RIA that focuses on crypto, and we are about to scale that to the moon. So here we go.
Amazing. Erin, absolutely. With your regulatory background and your experience and just looking back and now looking to where you are today, did you ever imagine yourself being at the helm of a disruptive technology company like where you're at?
So
Have you always had this entrepreneurial journey?
Kind of, but
Experience, you mean?
I will tell you my crypto journey. I fell backwards into crypto. It chose me. I did not choose it. I'm an attorney by trade, and I was doing sort of outside general counsel work. Recovering attorney. I was doing outside general counsel work for a lot of fintech firms, and I started to get crypto questions around 2016. And that was sort of early enough days where if you got 1 or 2 crypto questions as an attorney, you became the crypto attorney. And so every crypto question fell on my desk. And this was back in the days where I remember there was a monthly meetup of attorneys in the crypto space. And so I would sit in a room with the attorneys from Gemini and Coinbase and Galaxy, and we would all sit around and say, have you heard of this? What are you doing about this problem? How do we solve this? And it was a really exciting time. And that was when, in 2017, I founded Digital Asset Research, to try to get to the bottom of clean data, because how do you know what the price of these assets actually are, and how do you do that correctly? And then from there, I sort of went on a crypto journey. I went to PNC Bank for a little while, and I led their crypto efforts. I went to the London Stock Exchange for a little while and led their crypto efforts. And the one thing that I knew when I was going through that process was 2 things. Number one, I wanted to go back to a startup. I wanted to go back downstream where I thought I could make really, a good change. And then also, I actually firmly believe for years before I met Jake that the key to unlocking crypto markets was crypto wealth management, right? Whenever financial advisors could say to their clients, yes, you can allocate to this asset class, and here's how we're going to do it. And it's not just about education in that space. It's a lot of that, but there's been a lot of that for years. It's very easy to go online to get certified and what blockchain is and crypto assets. It's much, much harder operationally to do it. to actually implement processes and systems and the ability for a financial advisor to allocate to this asset class. And I knew that that was the unlock for crypto markets. I still truly believe that. And so I was really excited when I met Jake, that was his vision as well, through his own personal journey, and really incredibly proud of what we built.
Wonderful. We've gone way over time, but really, I believe everyone should appreciate this conversation. Before I do let you go, Aaron, is there any last closing remarks? You're going to be speaking at ETHDenver. Is there things that we haven't discussed or that you haven't heard in discussion at the event that you think the audience here would appreciate or benefit from?
Probably a lot of things. I mean, I guess I can give you guys a little bit of a vision of where I think the Digital Ascension Group is going. We have a lot of really incredible things planned. First of all, for the XRP community. I mean, you guys have always been core to who we are and core to our ethos, and that will continue. And we've got really exciting products that we're working on, and we are very close to launching. We also have a lot of products outside of X. I know. Sorry. We also have a lot of products outside of XRP. We just launched a Bitcoin strategy that we're with 2Prime and Fidelity, and we're going to continue to expand into other assets in this asset class, which we're really excited about. We recently launched a product that's unique for retirement accounts, an algorithmic trading strategy with our Arch Public that we're really excited about. And there's a lot more coming down the pike. We're looking at international expansion right now. Just a lot of really exciting things.
Amazing. Kudos to you, Jake and Aaron. Congratulations. I look forward to leveraging your guys' services very soon. If you don't hire me at all or anything like that. I'm just kidding. But anyways, appreciate you guys coming up, and congratulations. Jake, any closing remarks before we let you go, sir?
We're going to diversify across the asset class, right? But I just want to say XRP is always going to be at the core of what we do. We have this Bitcoin product. We're looking at other applications. I mean, you've heard of these other blockchains. All of this stuff's going to be used, and there are other large communities and people that want access to the stuff that we're doing, and they need it, right? They need wealth management, but I just want to remind everybody, similar to Ripple, like XRP is always going to be at the heart of what we do, and we want to make sure that we're building real-world things that are applicable for those that hold significant amounts of XRP in the retail community, high net worth individuals, and other people that are making allocations to it, because I do believe that it's going to be the backbone of financial markets.
Oh, love to hear that from your mouth to God's ears. Guys, well, let's give a hand to Aaron. Congratulations. And Jake, thank you for coming up on stage. Appreciate you guys. Thank you so much. Aaron.